Some expenses are easy. Continuing education is generally deductible. Gym membership, not so much. So, where does the watch on your wrist land? Is that tax deductible? Short answer, generally no. If you control the corporation and you wear the watch personally on your own wrist, even while working, running it through the company doesn't really get you ahead. Yeah, you don't come out ahead on tax. The CRA's default really is that you got a taxable benefit, so you pay personal tax on the full value. And depending how it gets characterized, the corporation can lose the deduction too. So we'll come back to that. Uh, let's look at it from CRA's perspective. You control the corporation, so you know this gets a closer look. Also, it's a watch that you wear everywhere, including personal use. So it counts as a taxable benefit to you. For most people, the clean move is buying it personally, but there is one narrow exception that I will come back to. Now, I can see your argument that you wear it during your workday. You figure that makes it a work tool. Unfortunately, the test isn't, is it useful in practice? Plenty of useful things still aren't deductible. In this case, the angles that matter most are capacity and purpose. Capacity, really, when the corporation paid, was it acting as your employer equipping you for the job? Or was it just paying for your personal stuff? And purpose, was the watch bought mainly to earn practice income or because you wanted the watch? When it's worn all day, paired to your personal phone, tracking your sleep and your workouts, it really does sound personal. Where this can get expensive is how the CRA can characterize it. So assume that the PC buys it and you keep it. There are two ways that can go, and neither one is free. If it counts as employee pay, the corporation gets its deduction, but the full cost of the watch will land on your T4. You're keeping the watch, so there's nothing to prorate. You bought a watch with taxed income plus some paperwork. Now, if the CRA treats it as a shareholder benefit instead, you're taxed on it personally, and the corporation generally loses the deduction. So the same dollars get hit twice. Now, there are situations in which an Apple Watch could be deductible to the corporation. Even for a one-person corporation, if the PC pays you a salary and the watch genuinely functions as part of your pay package, not just an owner's perk. But realistically, that's a much harder sell. You'd need to show a genuine clinical function like secure messaging or call coverage and a written policy, usage logs, that sort of thing, pay benchmarked against the market. And of course, you would reimburse the personal portion. That is a narrow fact-driven case. Even then, the personal portion, yeah, will be on your T4. Good records would improve your odds. They wouldn't guarantee the result. Back to the cleanest path for most, it's to buy it personally, skip the whole problem. You skip the benefit and audit risk and the paperwork that comes with it. Yeah, going through the corporation mostly trades a small deduction for a headache. But if you genuinely think you have a case, document it properly. A few other things worth asking your accountant about while you're at it. Can the PC own your car for one? That is a big one, but that one comes with its own set of rules. Your phone, same family of question here. It's a similar capacity question kind of for certain expenses like these. The watch is one version of this discussion. So yeah, similar ones out there. Bottom line, default to buying it personally. If you think you have a real case, document it, ask your accountant. If you have any questions, let me know in the comments. Citations and numbers are all in the show notes. Thanks so much. Have a great day. I'll see you soon.